Good morning and welcome to the Alpha Pension Group Retirement Recap for Friday, November 6th. It's our Fiduciary Friday version, and with me is Mark Salamone, our lead consultant, and our Chief Investment Officer, Rob Milas. Rob, I think we're all bracing this week because of the presidential election, and presidential election still going on. We thought maybe the markets might not cooperate, but up until now, anyhow, it's sort of been a nice week relative to the market.
Yeah, Rich, it sure has. As October came to a close, we had this kind of scare and a sell-off with the S&P declining 5.6% last week. But it took less than 3 sessions to regain that loss and actually, build on that. So as you can see, we have had a really good week in the S&P 500. That kind of continues, although I guess futures are off a little bit this morning. But it's not only U.S. that's rallying, it's also Europe. And what's been rallying? The same stuff that rallied before the presidential election issues, which is the mega cap stocks that have experienced huge gains all year long. So they're calling this the FOMO rally, or fear of missing out. And it really kind of feels that way. On the bond market side, remember, yields are opposite of the price, and so we're showing price there. So yields were backing up prior to the election, and now they're starting to come right back down to the levels at which they were kind of almost a month ago. So interesting, kind of trends there in the bond market as well, which kind of foretells that we will expect to get stimulus. It probably won't be in 2020, however.
Understood. And whenever I look at these market rallies, whether it's because of fear of missing out or anything, I look at those mega cap stocks and I just say, if those weren't in there, like, what would we really be looking at? So, but nonetheless, certainly interesting. And thanks for keeping us informed. Now, Mark, I know you very well. And this time of year, a jolly guy like you, you're always looking ahead to like the holidays and other things. Why don't we keep the holidays out of it and just tell us what we need to look ahead with in terms of retirement regulations and obligations for the end of the year?
Thanks, Rich. Actually, yeah, around this time of year, there is a lot to do for the retirement plan, and it's not really for 2020, it's for 2021. So what our clients are talking about in the fourth quarter is traditionally, well, how is our plan set up for next year? Things like safe harbor match. Safe harbor match is something a plan can elect. And that match is not only very beneficial, it also helps with that non-discrimination testing that every 401k plan and to some extent 403b plans have to go through every year. And that's a discussion you have to have now, model out and kind of do the math on right now, because you'd have to elect it and announce it to your employees 30 days in advance of the plan year. So if you have a calendar year plan year, you have to tell everybody by December 1st. So we're meeting with a lot of clients talking about that. Also, another item that typically is pretty hot topic is auto enroll. Auto enroll is been really catching fire over the last few years. More 401k plans have it. And it's essentially just, instead of having people fill out a piece of paper or go online to enroll once they're eligible, it's automatically enrolling them, making them consent to really not joining the plan, opting out versus automatically opting in. And that has led to a lot of plans not only doing really well with participation, but getting more people putting more money away. So those are the conversations that if you're not thinking about them right now, if you have a plan that doesn't have great participation, or if you're having annual non-discrimination test issues, it's something to consider and something to talk about with your advisors and internally.
So, Mark, when you mentioned safe harbor, I know there's a notice that needs to go out. You just mentioned that. Whose responsibility is it to send it out? Who generally does send it out? Like, if I'm a plan sponsor, what do I need to be thinking about in the context of the notice?
Yeah, that notice definitely is the plan sponsor's responsibility. Now, it doesn't mean you have to do it or have to physically be the one sending it off. A lot of record keepers will help you with that. Or if you have a third-party administrator, a lot of times they'll do that as well. But the distribution of that notice, it is important to go out, and that is on the plan sponsor.
That's right. And that's one of those things that actually gets picked up in an audit. It could trigger an audit, or certainly would get looked at in an audit. So I know what we do for our clients is we make sure it goes out, whether we're helping them send it out, they send it out, the TPA or vendor sends it out. One of the easiest things to do, honestly, is to automate it. So whomever your record keeper is, have them send it out on your behalf. One last question, big guy. On the automatic enrollment, is there a notice that needs to go out there, or how is that handled?
with auto enroll, how it works is once someone reaches eligibility, a notice has to be delivered to that person, letting them know that in 30 days, if they don't opt out, they're going to automatically be opted in to the plan. So there's a lot that goes with that. You have to, once you hire someone, track their eligibility, make sure that if your eligibility is quarterly, every 3 months, and quarterly entry, that you're in line with that, if that's how your plan's set up, and that the notice gets delivered on time, and that your participants have an adequate amount of time to say yes, they want to join, or no, they don't. So there is that notice that has to go off. And that actually is something that every year you have to keep up with, because as you continue to hire people, that notice is something that you always have to keep track of. So if you're doing it on your own and you haven't really either, having your payroll integrated maybe with the 401k plan or having something automated, that becomes something that can be not only an issue for, someone internally in the organization, but it also could be, if you don't do it correctly, something you have to correct down the road, and it could be costly to do that. So when you make that decision, you want to try to make sure that the processes are in place to really do it correctly and not have an issue.
So these are heavy topics. There's a lot of things that need to happen when you have these features in your plan. So I know our whole philosophy at Alpha is let's set them up if it makes sense, but let's put in either steps to make sure they get done. We'll watch over that or automate them, but they need to get done. So if you're working with a consultant, ask them who's in charge, who's watching it for you, because it can easily slip through the cracks. So thanks so much for joining us here on the Fiduciary Friday version. We have lots of other good content that comes out throughout the week, so please follow us on LinkedIn and Twitter, and enjoy your weekend.